Hey guys, happy Monday. My background is appropriate for today. It's May the 4th, so May the 4th be with you. And if you don't get that or you rolled your eyes, then we're not friends. You can hang out here, you can learn all you can from me, but I don't know if we can ever be friends. You guys know how I am with my Star Wars and my Harry Potter. If you don't know me, I am Brianna Beers. I own Lipa Beers and Associates. We specialize in tax prep and tax planning. Tax planning is our jam. It is where we get to help our clients strategize and save as much money as they can, keeping it in their pocket so they can invest it back into their business or into themselves. And this group, if you're new to it, Money, Taxes, and Finance for Small Business on Facebook. If you're watching this on any other platform and you're not a part of this group, go join. What are you waiting for? If you are in this group but you're new, I'll tell you, usually when we're not in pandemic, this is about things like we're going to learn today. It's about things that help you get your business finances in order and make it so your finances, your business financial statements can be used as a tool rather than a burden and a headache. And as of the last probably 4 to 6 weeks, we've been talking a lot about everything, government assistance. But today, Mondays, it's all about just regular business operations. So I'm really excited to have this series back in place. I am so sorry. I'm going to keep itching my nose because of allergies. All right. So today, you guys, is part 4 of our new business series. And today we're going to talk about, I'm going to give you the top 3 suggestions for new business owners. If you are not a new business owner, you need to stick around because you need to make sure that you have these 3 things in place in your business. Because I know many of you out there don't. And so listen up, stay with me, listen to these top 3 suggestions, whether you're a new business owner or not. I guarantee you're going to get something out of this today. So the first thing, as you're starting a business, getting ready, thinking about starting a business, whatever it is, wherever you are in the process, already have started a business, is to have a separate business bank account. The most important aspect of this is to make sure that you have a completely different bank account that you're running all of your business expenses and only your business expenses through. All right, raise your hand. No, you don't need to be shy, or you can be, but I can't tell you how many clients I have or people I talk to who are just running all of their business stuff through their personal bank account. First of all, this creates such a headache. All right. It creates a headache for you when it comes when tax time rolls around and you're trying to get all your business expenses for your accountant or to self-prepare your tax return in order, and you're having to go through your bank statements to pull out all your business expenses. If you have a tax accountant or a bookkeeper who does this, it makes their job harder. All of your business and personal expenses all commingled. If you're an LLC or any type of business setup, if you're not just a sole prop running your business under your social, you're going to create problems when it comes to establishing or proving that legal separation. And what I mean by that, disclaimer, not a lawyer, this is not legal advice. The whole reason most people set up an LLC or a separate corporation or an LLP, any sort of business entity, is because they want a separate entity structure legally that is separated from their personal assets. And the biggest thing is so you're protecting your personal assets, right? So if somebody sues your business for whatever, they can only try to, come at you for your business assets and your business money, right? They cannot come get your personal. Okay, so that's a legal separation that most of us have made. And if you are commingling your funds, it is what they call piercing the corporate veil. Okay, even if you're not a corporation, even if you're some sort of other business entity, right? It's called piercing the corporate veil. And if you were to get sued, if you were to be taken to court for malpractice or whatever, they can look at that and say, you are not a separate business entity. You are running your business as if it's your personal, they're all commingled. And so they could go after your personal assets. All right. So if that's the only thing you take away from today, is that commingling your funds possibly negates your legal structure of your business, then that's the only thing I want you to take away from this. Perfect. But the point is, I want you to open a separate bank account. This separate bank account needs to just be business expenses and business income, business transactions. All right, so all of your income should be deposited to this business bank account. All of your automatic business expenses, all those payments that automatically come out every month, should be set up to come out of this account. All of your payments for expenses and accounts payable and your costs and your labor, all of your business expenses should be paid out of this business account, of this personal checking, not personal checking account, your business checking or business bank account. The question I get always at the beginning is like, I can't open a business bank account because I don't have any income yet. I'm not making money. How do I open a business account with no money? Well, at the beginning of any business, you guys, you fund your business through cash injections of called owner's contributions. All right. And that's the case in pretty much every business. You have to put some sort of cash into your business because most businesses do start spending money before they actually make money, right? So it's called an owner's contribution. So if I'm starting a business and I put $1,000 of my personal funds into the business because I have expenses to pay, that money, when I'm looking at the bank account at the end of the year and I see that $1,000 of money come in, it's not income, it's not taxable to me. It's called an owner's contribution, which means it's just money that I contributed to the business in order to help it run. All right. And those owner's contributions can be made throughout the life of the business. Okay. So anytime you're needing to put your own personal money into the business, okay, that's called an owner's contribution and it's not income. On the same wheel, on that same topic, money you take out of the business for your personal use is not an expense to the business. It's owner's distribution. All right. So owner's contributions are not taxable income to your business. Owner's distributions are not tax deductible expenses to the business. There are a few, not exceptions, but people are going to be like, wait, I pay myself all. We're not talking about that. We are just talking about owner contributions, owner distributions. Okay. Cheryl says, what's the difference in that and owner's equity? Those are equity accounts, actually. So in different people's QuickBooks or software or whatever you use to do your bookkeeping, it can be called different things. If you're an S Corp, it might be called shareholder equity, shareholder distributions, shareholder contributions. If you're a partnership, it could be called partnership, anything, partnership equity, partnership distributions, partnership contributions. And if you're a sole prop, meaning it's just you, or an LLC and it's just you and you're not an S Corp and you're not a partnership, then it's just owner contribution, owner distribution. So different terms, great question, Cheryl, different terms, but all equity accounts. And for those of you that are like, wait, what's an equity account? We go over all of that in some of the earlier trainings when we talk about balance sheet and profit and loss, and that's a whole bunch of other stuff. So if you're not sure what I'm talking about when I talk about equity accounts, let's check out one of those older or earlier videos because we talk all about those things. So that is number one, open a separate bank account. So number two, I want you to determine how you're going to track your business finances, which no matter what method you decide in tracking your business finances, this step is going to be so much easier now that you have a separate business bank account. Side note, I also want you, if you do credit cards, to have a separate business credit card. Okay, I have so many people that open, sorry, I don't mean to jump around, I just forgot about this one, that open this business checking account, right? But then they keep putting everything on their personal credit card still. They keep putting all their business expenses on their personal credit card. No, 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 no. Okay, everything goes through your business checking or business credit. If you do not have a business credit card, then everything goes through your checking. You don't get to use your personal credit card for your business expenses. No, no, and no. Okay, separate. Okay, back to number two. Determine how you're going to track your business finances. Okay, at the very least, an Excel spreadsheet or Google Sheet, any sort of spreadsheet on your computer is how you're going to want to track income and expenses. Okay, I recommend this for anyone who has maybe 5 to 10 transactions that are the same every month. Okay, or less than 5 to 10 transactions that do vary every month. Okay, but if you get to the point where you're doing much more than that, I don't recommend an Excel spreadsheet because at that point, there's just too much room for error, for user error. Okay, And so for some of you, you're like, I don't have it in my budget for a software product, so I have to use an Excel spreadsheet. Do you? Okay. But that software, that QuickBooks, the Xero, the FreshBooks, whatever it is you want to go with, needs to be one of the first things on your list to spend money on when you have the money. Okay. It has to be. Okay. And this is an area where I get so many new business owners and like business owners who are just early in their journey and they're not making a lot of money that they tell me I can't justify that expense. Okay. And I'm going to come back at you every time until you can't justify not spending that money. Okay. QuickBooks Self-Employed, you guys. So that's for those of you out there that are just like a sole prop, maybe an LLC that you just don't, if you don't have any like accounts receivable, accounts payable, anything like that, it's $10 a month. All right. And actually I'll talk about it at the end. We have a partner program with Complete Business Groups where we can actually get it for you for $5 a month for the first year. All right. And then it goes to that $10. All right. This is for a very, very specific group of you guys. It's not for everybody, but for those of you that have no employees, you have no, maybe I think it's accounts payable, accounts receivable, then self-employed is going to be for you. And at $5 a month for your first year, all right, that's something that I want you to really aim to make that expense possible. Then you guys, there's QuickBooks Online, which is if you do have employees, you're more than just a sole proprietor. The QuickBooks Self-Employed is really just for those of you that are sole proprietors who don't have a lot going on, who just, you want to track your mileage and you have a few expenses, but that's about it. QuickBooks Online there's multiple platforms that get a little robust to a lot to like super. All right. Their most popular product is normally, I'm trying to think, QuickBooks Online, I can't remember which, I think there's 3 main online levels. And the main one is normally that I see is promoted as $25 a month. Again, we can get it for you guys for $12.50 a month for the first 12 months or $135 if you pay it up front. All right. And for those of you that are spending thousands of dollars, I know on those startup costs, $135 for a year of bookkeeping services or bookkeeping software is a steal. All right. So I'm an advocate for QuickBooks. A few reasons. One, it seems to be the most universally used by bookkeepers, and eventually you are going to want to hire a bookkeeper. Unless you are in the bookkeeping business, doing your own books is not something you want to do as you grow. All right, that's got to be one of the first things you contract out for or hire out for or whatever. And we can talk about that at some other point, but that's definitely something you want to strive to get off your plate. I believe every business owner needs to be, again, you're going to use your financials as a tool to help you make decisions, to help you, know where your money is and where your money is going. But ideally, a business owner is able to just look at the finances, like the financial reports, and use them as the tool. A business owner in an ideal world in business is not in the trenches doing, entering checks, doing the reconciliations, doing all that stuff. All right, because in the ideal world, you as the business owner are out there making money. All right, you're doing whatever it is in your business that actually generates revenue. All right, and if you generate revenue and you're able to spend however many hours that you're now spending on bookkeeping instead generating revenue, you're going to be able to pay for your bookkeeper. Okay, I have a whole webinar on that or a whole training on that as well. And you guys, but QuickBooks isn't the only option, and it's not for everyone. There's also Xero, there's FreshBooks, there's Zoho, there's Wave, there's QuickBooks Desktop. That's another option. But what I suggest is if you are in a place where you're like, I'm not touching my books, I am hiring someone, that's the first thing I'm doing, hire your person and let them get you in the product that they work with best. They're going to be able to likely get you a wholesale price. Again, if not, contact our, LBA, because we are partners with CBG, Complete Business Groups, and we can get you like the best pricing. And we pass those savings on to you. We don't mark it up or anything. Our goal is to get the tools you need to run your business, all right, so that you can run it successfully. So, Cheryl says she loves QuickBooks Online. I used to hate it because I was a QuickBooks desktop person, and now I love it. It's great. And you guys, the third, so that was number 2. Number 2, The number 2 suggestion for new business owners is to determine how you're going to track your finances and look at all of your options. We talked about a spreadsheet. We talked about QuickBooks Self-Employed, QuickBooks Online, and pricing for those, and then your other options as well. The very last thing, if you run a business, my last tip for every business owner is to find a tax professional. This is my professional opinion, obviously, as I'm in the business of doing tax returns, but as a business owner, not as a CPA, as a business owner, a tax professional that knows what they're doing and knows how to help you is imperative. All right. They're going to, and from the beginning, when you're first creating your business, a lot of people are like, well, I don't need a tax, I don't need to worry about a tax preparer. I don't need to worry about a tax advisor until I'm ready to file my first year's tax return. But there's actually so many things that a tax advisor can help you with in the startup of your business. Do you need a tax ID number? They can talk to you about that. It's an FEIN, a federal employer identification number, or a tax ID number, or an EIN. All those things are the same. But do you need one for the business you're opening? They can help you navigate that, all right, and decide, do you need one, yes or no? They can guide you in the right direction of creating a business plan. Typically, this is something you'll either do on your own. Sometimes you can get an attorney to help you with this, but that's kind of expensive. A lot of tax professionals have a template that they can at least get you pointed in the right direction. That's something we have as well. You can talk to your tax advisor about LLC versus corporation versus sole prop. What do those things mean, and what are the benefits of each, and why do I want to lean in one direction? Another question, what do you do with startup costs? Okay, I think we talked about this last week. A lot of times you're paying money out before you're ever ready to make money, right? What do I do with that money that I'm spending? Those startup costs. Your accountant can help you with that. And again, they can also help you with a software system. All right, so some of these things a tax professional can help you with, some it's a bookkeeper, but an accounting professional of some sort can help you with each of these items, okay? If you find the right tax professional or right accounting professional, they can help you with it all, okay? They can help you with the tax aspects and the bookkeeping aspects, but you might have to go to 2 different people. It just depends on who you go to, all right? And then ongoing, they can do so much more for you. All right. So many people think that tax or like CPAs just do a tax return, right? That's all they're good for. They just do the tax return. It is what it is. They put my information in and they tell me how much I owe, or they tell me how much I'm getting back. All right. But in the tax preparation itself, a good tax preparer can help you save money, can help give you tips on how to save your money and decrease your tax liability. They can help you plan for the upcoming year during tax prep. And if you find a tax advisor who specializes in tax planning as well, then like us, we have times during the year where we offer tax planning, and you guys come in and we talk about how mid-year, how can we take this income that we have right now and minimize it and put it into the business? How can we put it back into, can we invest it into ourselves and lower our tax liability? Can we invest it? Can we take it and invest it in, can we invest it into our kids' college and decrease our taxes? All the different things, sometimes it's as simple as we just want to make sure we're paying in enough tax so we don't have a big tax bill come April 15th of next year. All right, whatever your tax planning goals are, a good tax advisor can help you with those goals and help you attain them. So having a tax advisor is imperative, but definitely having, someone in the accounting side of things to help you out is gold. All right. So that's that. That said, you guys, I do want to mention, I do know a lot of you guys in here prepare your own tax return. I think I said last week, I was surprised to hear that. I thought when this group first started, most of the people in this group were either my clients, or they used like H&R Block or Jackson Hewitt. They use some sort of tax chain to do their tax returns. And as we've grown, that's really changed. There are a lot of you in here that prepare your own tax returns, I think last time I checked, there was a big chunk of you guys, especially my sole props out there. Shout out to my sole proprietors who are preparing your own tax returns. I was getting so many questions from you guys, like, am I doing this right? How do I make sure I'm maximizing my deductions? How do I make sure that I'm doing this form right? And so I created a product just for those of you out there who prepare your own tax returns. And it is a 2-hour workshop. It's May 13th. That's next Wednesday. If you can't catch it live, it'll be available to watch on recording, but live is the best. Okay. And it's a 2-hour workshop for my self-preparers out there with a Q&A, with a PDF guide, and it'll also have a tax return cheat sheet. All right, so this is going to be for those of you that haven't filed your 2019 return. It can also be a tool for those of you that already have. I know a lot of you guys have already filed your taxes because you filed it before they filed this extension or they announced this extension, but this workshop will help you to know what to get ready for next year. So whether you've filed your return or not, I think this workshop will be fantastic, a fantastic tool to come in and sit in on the workshop, I'm sharing my secrets, guys, my secrets for trying to avoid an audit, right? Making sure you're filing your return right so you're avoiding an audit. The most missed tax returns or tax deductions and credits to make sure you're maximizing your refund that you're getting, and how to do these things and save time. I don't know about you, but I know so many of you out there just spend so many hours doing your tax return and preparing it. And so I want to help you guys take back some of your time, keep some of your money, and get some confidence that the IRS isn't going to come back to you telling you you filed your return wrong. So that said, like I said, the workshop is next Wednesday. So if you guys want in, let me know. I will put the link to register in the comments. It's you guys, this value is over like $300 because to have some, not one-on-one time, but that Q&A and that training from a CPA I don't know, but it's costly, right? But I'm trying to just get this information out there. So it's $147 for this group. I'm doing a VIP for $97. $97 for a 2-hour workshop, a Q&A, a PDF, a checklist. I'm really excited about this. So please, if you think you can benefit from this, jump in on this because it's going to be amazing. All right, I will put the link in here in just a moment, but I am going to go check on the comments. We're good. I talked to Cheryl. All right, we're good. So awesome. Thank you. Next week will be part 5 of this new business training series. Don't forget Wednesday afternoon at 2:00 Mountain Time, we have our non-financial business series kind of going on where we'll talk in here. I can't remember what it is off the top of my head. And then at 2:30 on Wednesday Mountain Time, over on the Lip of Beers and Associates page, we have a Q&A with LBA. So bring your questions. And then Friday, we have in here at 2:00 updates and Q&A. And for you, those of you that are like, there's 2 Q&As, which one do I go to? Well, typically the QBA with LBA is more individual return oriented, whereas the Q&A in here is usually more business oriented. So, but go to whichever one you can. All right. So that's that. As always, I thank you for joining us today and I appreciate it. And we will see you hopefully on Wednesday.